All right, good morning to you all. Today is a session for our class. So um, we're starting immediately. And today, as you all voted for support and resistance, we are going to look at support and resistance. All right. So we're going to look at support and resistance and its details, what it goes into it. I won't be able to share all the details in one session, but I'll try my very best to do that. If today is your first time joining Profit Waves YouTube channel, please don't forget like, comment, and share. Share it with friends, families, even your enemies. Share it with them. All right. By so doing, it encourages me to give you more exclusive contents. Let's go into the real deal today, that is support and resistance. Okay? All right, all right. So let's go into let's go into it. Let's go into it. Okay. So what are we coming to look at? We are coming to look at support and resistance. Support and resistance. Very, very important and very, very powerful. Simple concepts that we are going to look at. All right. So somebody would ask, what is support and what is a resistance? All right. The basic definition for support and resistance is support refers to a place or a price level at which buyer's pressure is expected to be strong, preventing price from falling further. So market is actually moving, then it gets to a point it won't or it does not agree to move further down. It does not agree to move further down. What happened is that at this point, the fall would stop, and then we expect or anticipate that buyers will come into the market. All right, now let's go. Now let's go. Then what is a resistance? Resistance, on the other hand, is a price level at which selling pressure is expected to be significant, preventing the price from rising further. Basically, that is the definition for support and resistance. What is the importance? What would these support or resistance help in doing? What's the importance? All right. Understanding support and resistance levels helps traders identify potential areas of price reversals, locate favorable entries and exit points, and manage risks effectively. So it's a very good strategy. All right. It's not a holy grail, but it's a very good strategy. Now, how do we find resistance levels or support levels in the chart? How do we find them? Okay, so finding them, how do we find them? How do we find them? One, open your charts. So you open the chart like this, and then we're going to find them. To find resistance level, open the charts of the currency pair you are trading and select the desired time frame. Analyze the historical price movement to identify significant highs. So we are going to find resistance. All right. First, let's say we should open the chart So let's open the chart. Second, we should find the highest point. So let's shift this like this. Let's assume that all this part is not here. All this part is not here. All this part is not here. All right, so let's assume that. Okay, let's assume that. The first thing is that, so all these parts is not yet shown. The first thing is that find the highest point. So you find this tool called the horizontal tool right here, like this. Find the highest point. So this is the highest point. All right. After finding this highest point, what you do, mark it like this. Some people also mark the close of the candle like this. So then they get two areas, but we'll come to that. Now, we are expecting that when price gets here again, we should see a sell. And indeed, when price got to that same point, we saw a sell. Right? Basically, this is support and, this is resistance, finding the resistance. So we found the resistance. At this point, we expect that when price gets here, anytime price gets here, we should see it not going further up or further rising, but rather it should start declining or start selling. Okay. All right. So basically that is that. As simple as ABCD. Now we have seen what a resistance looks like. We have seen what a resistance looks like. So let's label this resistance level. All right, perfect. So resistance level, we've seen it. Now let's go back. So we identify and then we did all of this. So draw an horizontal line at the top, and then we did all of that. So this is basically how it actually looks like. So now we have found the first level. Now when price gets to this point, we expect that we have a reaction. And yes, the reaction occurred. Okay, the reaction occurred. All right, that's very, very cool. That's very, very nice. Now let's go to the support. The support is the opposite is true. Okay, so finding the support, first of all, you find a level where price actually did not move any further, all right, into the sell direction. So at this point, we pick this tool again, we mark it. So when we go here, you see that price did not go further. This one, this two, and then we have these ones here. I'll mark them with we have these ones here. So when price got to this point, this is what happened. We have seen this. So it means that in the near future, when we get to the same area, we should see price do the magic, right? It should start buying. Because of how support and resistance sometimes operates, some people think it's a self-fulfilling prophecy. It has to happen. No. Consider some of these things whenever you are trading support and resistance. Price action. Price action, continuously observe the price movement and look for areas where the market struggles to surpass, indicating a potential support or a resistance level. All right. So when markets get to these levels and they cannot move anymore, you see that they start to play around that area. It's likely that we can reverse or we will break. We'll look at what a break is. So We can use other tools, other technical tools, like the volume analysis. We'll check how much volume is in that trade and how much volume has increased or decreased at the support level or the resistance level. So analyze trading volume at key levels to identify where significant selling or buying pressure is concentrated, signaling support or resistance levels. So we also have to use some tools. We can use some candlesticks. We can use some chart patterns. We have so many technical stuff to combine them to get the accurate points. Then historical data review. Review price actions to pinpoint levels where the asset has previously faced selling or buying pressure, forming a support or a resistance point. So let's go to the chart. We can see clearly at this point, example, at this point, we can see clearly that price actually was making some kind of movement. When it got here, it did this first move. It did this first move. Sorry, this first one. Okay. And then this second one. So it's likely that when we get to this area again, we should see some reactions. Okay. And behold, that is that. Okay, another reason. So that is that for the first one, and that's that for the second one also. So you see, when price got here, it made 45 pips. Then it got there again, and this time around it made 130 pips. Very simple strategy. Very, very simple. But it does not work all the time. You have to know exactly what you are doing. I'm not saying, okay, then from Monday onwards, you are trading support or resistance. It's not a full proof or it's not a self-fulfilling prophecy that immediately you see it, it has to work. All right? Now, adding a second line, which is the horizontal line to the chart. Now, let's go get that. Let's go get that. Adding the horizontal line to the chart. All right. Sorry, guys. So, I can switch. Let me switch from here to another part. Let me switch. Okay, good. In fact, this will even be better. All right, so I'm switching. I'm using this area. First of all, we have to find the lowest point. So this is the lowest point. And I told you some people use the close of that candle. All right, the close of that candle. That is it right here. So where is it? The close of that candle. Good. So the close of that candle, that is here. So let's mark it like this. This is the close of that candle. Now look at this. When price got here, we had a move. All right. So you can see the move actually happened. Price got to the same point again, and then we have another move. Okay. Then price got there again this time around. It didn't work out. Sorry. So it didn't work out this time around. What happened? This is where some people will be like, that thing, it doesn't work. No. You don't understand each and every single thing. All right. It's not everything that you actually understand. If you know exactly what you are doing, you then know what is happening. So this time around, it didn't happen. It just went through it and later come back, and then it did this and went down again. All right, you can see. So yes, support and resistance works. Okay, it works sometimes. It doesn't work sometimes. All right. Now we have seen support, we have seen resistance. We have seen how to draw the double support levels or the double resistance levels. All right, creating a zone like this. Okay, creating a zone like this. It's very simple, very, very cool. Let's continue. So, yes, identify a potential support or resistance level above or below the current horizontal lines where second line can be placed without interacting the existing price action. All right. So we have done that. Once you draw the second line and you draw the first one and then the second, it should give you a zone. The two of them should not be at the same point. Okay. Some people emerges two time frames to create that kind of zones. Some people look at a lot of stuff before they create that kind of zones, right? So you can actually label some of these or change the colors of the zones. And like I've done it here, you can label them like zone 1 and zone 2, or you can change the color red and blue and whatsoever. You can do that. Now, when we get to a resistance level or a support level, two things will happen. All right? Two things will happen. We would have this, a bounce. We can bounce off the zone. Okay? We can bounce off. So this was a nice bounce, and then we go again. We bounce again, and then we go again. But this is the second one. This is what we call a break. So now we broke that zone. The zone is broken. So two things is about to happen each and every single time we get to a support zone or a resistance zone. We will either bounce off the zone or we will break the zone. Okay? So it is not always what you are thinking that is supposed to happen. So we can bounce off the zone, we can reject the zone, or we can break the zone. Okay, bounce off is equal to reject or rejection, and then break is break. We break it. All right. So now we have seen rejection, we have seen a break. When we break, all right, two things happens. Sometimes, let me use something like this. So let's assume that price is coming. It gets to this zone. You are expecting that it will reject or it will bounce off like this. But that didn't happen. But rather, it broke. Now, this is why I said two things happened. Sometimes it breaks like this, and then it continues. It doesn't even come back. But according to support and resistance traders, whenever we break a zone, when we break a support zone, it tends to be a resistance level. And whenever we break a resistance level, it tends to be a support level. That is what support and resistance traders say. Okay? So, if we broke this thing like this, let's change the color. First of all, let's say the color is this. This was the color. Because anytime we get to this point, we should expect a sell, according to support and resistance traders. And the more price reaches here, the stronger this zone becomes. So it will even change color to deep red. It will change color. All right? The more we get there, then it's becoming more stronger. Okay? According to support and resistance traders. That's what it means. I don't trade support and resistance. I know the concept, but I don't trade it. I use it as part of my analysis. All right. So when we get here and we break it like this, we break it like this. According to support and resistance traders, this zone, which is colored red for sell, would then change to be green or aqua. The reason being that now they are expecting that this, which was a resistance level, now has become a support level. So price will come and test. So we call it break and test. Okay? So you break and then you test. So they are expecting price to break and then come and test. So retest. Then when they break and then they test, then it gives them a more room to go up according to the support and resistance trading theory. Let me put it that way. So whenever we get to a support level or a resistance level, two things, whenever we get to a support levels or resistance levels, two things is about to happen. Price would break or price will reject. And when price break, we expect a retest. Now let me explain. So remember this zone. Remember this zone. Price actually broke the zone. It broke the zone. After breaking the zone, look at what happened. Now let me make it bigger for you to see. Now after we broke the zone, now we had a retest. They are coming back to test the zone again. So now this zone would be red. Will be red like this. And you see, after that time, price started to drop further down. Very simple, right? Support and resistance, very, very simple. So, yes, after they came back to test it because it is still red. So what will price do? Price will still sell according to the support and resistance theory. So price came back and then it did a sell. All right. Price got to the same point again and did a sell again. The theory is right? No problem. So basically, this is support and resistance. Basically, the basic support and resistance. Now, when you find these things, when you watch the chart and you find these things, I told you, it is not always 100% true that you have to reject it or bounce it or you break it. It's not always true. I won't say my theory is the best. I won't say. But I have a way of doing my own stuff, which works for me. If you try it and it works for you, voila. All right? So whenever you get to these areas and then you want to pick a trade, please also don't forget to add risk management. All right? Don't also forget to add risk management. It's very, very important. Risk management is very, very important. It's very, very key. All right, guys, 1 second. Sorry, guys, I'm back. So you also have to include money management. Okay, so you have to know where to put your stop losses. You have to know where to put your take profits. According to support and resistance traders, it is important to set your stop loss or your stop loss orders below support levels to limit potential losses in case the price breaks. Similarly, take profit orders can be set near support or resistance levels to secure profit when price reaches those levels. Right? So, according to them. Now, why does market actually tend to obey support and resistance? Why? Psychological factor behind support and resistance. All right. Support and resistance level reflects a collective memory of market participants who remembers previous price levels where buying or selling pressures influenced the market. So a lot of people saw that when price actually got to that particular point, it did a sell the first time. It got there again, it did a sell the second time. It got there again, it did a sell for the third time. So then they now believe that, okay, if price gets to that point, it can do a sell or it can do a buy. And that is the reason they tend to place their orders in these areas. Okay? All right. Now let's go on. We're going on. Head mentally. When price approaches previous support or resistance level, traders tend to react similarly. So whatever they did before, they will do the same thing, creating a self-fulfilling prophecy as buying pressures increase or selling pressures intensifies. Emotional trading. Support and resistance levels are often influenced by emotional factors such as fear, greed, and market sentiment, which can lead to buying or selling at specific price levels. Why are we saying that? When you place a trade from here, all right, when you place a trade from here, and then price is coming, it keep coming and it's getting to these areas, you know, all right, that is likely that this thing can reverse. So what will you do? You start taking profit. Remember, you are selling. Forex is simultaneous buying and selling. So remember, you are selling. It means that somebody was buying for you. Now you got here, and then you close your sell. It will left with the buy position, the person buying. So the person would do the buy for you now. Now it's the person's turn. All right. So market will change direction. Do you get it? This is where, or this is how market tend to move for support and resistance. Because at this point, market have to do the turn, because psychologically you're thinking that when you get here, there are going to be some buyers, and those buyers would affect your profit. So what do? You close your position. Closing your position, you have also participated in the buy. Okay? And that's basically it. All right. Let's continue. Let's continue. Where is this? All right. Support and resistance across multiple time frames. Now you have to look at support and resistance across multiple time frames. That is the 30 minutes, the 1 hour, the 5 minutes, the 15 minutes, whatever time frame you are looking at. Monthly and weekly are the strongest time frames, all right, or the biggest time frame. And these points also can serve as the strongest support or the resistance levels. For daily and 4 hours tends to be the medium time frame. All right. So at this point, those time frames actually can tend to hold trade for a very long time. So if you want to trade support and resistance, you can equally go to, let's say, daily time frame, find a strong level of support or a strong level of resistance. Then you come to the short-term time frame, which is the 1 minute, 5 minutes, and whatsoever, and then start to pick the trades in that direction. You now know that price have rejected a level in the daily or the weekly, and then you come to the smaller time frame, which is the 5 minute or the 1 minute, and start to trade the sell directions. Right? That's basically it. By so doing, you are always right in the market. You can also add certain things like pattern recognitions. Pattern recognition, you identify certain patterns of candlesticks, patterns, chart patterns. All right, you put all these things together. Okay, put them together. So at a strong level, look for rejection candlesticks like hammer, doji, dragonfly, hanging man, all those rejection candles. Look for them. All right. Then you can also look equally for chart patterns like double tops, double bottoms, triple tops, triple bottoms, head and shoulders, cap and handles, a whole lot of patterns. All those patterns you know. Then you can use some indicators to confirm. I cannot go through all of that. So you can use some of the indicators to confirm these levels. That is, you can use an indicator like the stochastics, the MACDs, the RSIs, but there are a lot of indicators there. Okay, you can use all the indicators you know, all of them, even custom indicators. You can use them to find these levels and then you trade them. Don't always forget adding risk management. All right, now we are coming to the end of the session. Always try to learn. All right, learn new stuff, learn new things. Okay, so develop a strategy for systematically locating and assessing support or resistance level, refining the process with each analysis. So when you do it for some time, now it will get to a point you can actually tell areas where price is likely to do a sell or likely to do a buy. And these areas, out of 10, maybe you can lose 1. All right, by learning, continuous learning, practicing, doing it over and over again, you can actually achieve that. Adaptation to the market conditions. Understand that support and resistance levels can change over time and adjust analysis method to account for evolving market dynamics. Yes, before, some people were using the candle bodies to trade, right? But now, in today's era, a lot of people do not use the bodies of the candle anymore. They use the wicks of the candle. So it means that we are evolving, we are changing, all right? And because market is changing, we also have to change, meet up with the market. We move with them boot for boot, and that is how we can profit from this market. Okay, so you adjust yourself, you then adapt to the new environment of trading. All right, understand that support and resistance levels can change over time, and then okay, yeah, dynamic strategic decision making. Use support and resistance levels as part of comprehensive strategy to make well-informed decision in the market. So now it is not only about support and resistance. Add certain things to it. Spice it up. Okay, things that works for you. And whenever I'm teaching my students, I tell them, hey, I am an Elliott waiver, but you can all not be. All right, some of you will trade different strategies. Okay, even though I'm the one teaching you, because at the end of the day, you would see things that works for you best. Some chart patterns that works for you best, some candlesticks that works for you best. You would see things differently. Even though I'm sharing the same idea, the same lectures with all of you will see things differently because of how you understand it. Right? So you all cannot be doing the same thing. All of you will be doing different things at different times, and that is perfect. You are human beings, you are not robots. Okay, it's only robots that can learn or that can do exact, because when I say okay, do this and do that, they will all do the same thing. But with humans, we understand differently, and then we would apply differently. Okay, now let's go on to the conclusion. In conclusion, support and resistance are essential tool in trading, in forex trading, helping traders anticipate potential price reversals and then identify entry and exit points. and manage risks effectively. By utilizing these concepts, traders can enhance their trading strategies and make more informed decisions. At this point, I would say thank you all. Thank you all for coming and then listening to me. All right. Now, I think um, okay, I think you would have an idea on what to do next whenever you are trading. Okay, you have an idea applying all these things whenever you are trading. All right, so in your next trading, please try put these things together and see how best or how effective these stuffs will work for you. If today is your first time joining us on our channel, please don't forget like, comment and share with friends. All right, the name is Dr. Mola. Bye for now.